Welcome back, traders and investors. We have Tim Melvin of the Deep Value Investor Level, and he keeps his head a little bit better than Dennis does here with market tops and market bottoms. So you heard Dennis's rant on the market and perhaps some upside capitulation in the futures on that Friday quad. What kind of level? What are you looking at here, Tim? What's your overall feel on the market?
Well, as you know, guys, being a value guy, I really try not to think too terribly much about overall market levels, but that's unrealistic. They're kind of in your face every day. You have to deal with it. And as I look out there and I'm looking at the overall stock market and I'm looking at the things that I use to measure the market, like market cap to GDP, freely admit I stole that from Warren Buffett, but the Tobin's Q ratio, or one of my new favorites that we've done a lot of research and work on and stole a lot of research from some guys out at Cal Poly, is the median appreciation potential that's listed on the front cover of Value Line every week. And the higher that is, the better it is for stocks. Well, it's very low right now. It's down at 35, well below the 55 level where you really should be out of the stock market. I'm just kind of amazed that people can keep whipping up enthusiasm for buying stocks in face of, what are not great earnings, a mixed bag economically, and just ridiculous geopolitical risks right now. And, I'm talking in my book, I've got a lot of cash, having a hard time trying to find cheap stocks. But Dennis, I hope you're right. I hope this thing rolls over and goes lower. I could use it.
Well, yeah, I'm just looking, and I've been kind of bullish here for a long time. Joel's been calling me the perma bull here, and finally I saw a reason to try to get bearish because billions and billions of dollars were put to work at that Friday open, and that was right at the top, and we turned and reversed, and then we saw some action coming out of the biotechs were really weak, and the 3D printing stocks were weak, and some of the momentum stocks were finally showing some weakness. And now this morning we get this little 4 or 5 point rally here, and it's the buy the dippers coming in saying, stocks are cheap, I'm going to come, because they always come in and they've been rewarded every time they come in. But one of these times, these buy the dippers are going to be coming in this market and they're going to get punished for it. So I'm hoping that could be today because I'm short too here, Tim. But
yeah, I'm never short. I will say that it's I don't think I've ever been net short. And when I do short, I do little chicken shorts on momentum stocks using put spreads.
Okay.
I just seen too many people carried out of the building by shorts, especially if the ones that use options to create them, selling calls and that type of thing. And I have a strong desire not to be carried out of the building on my shield. And also like JP Morgan, I'm well aware that it's usually a bad move to bet against the U.S. economy. So I don't bet against it, but I'm not opposed to sitting here on the sidelines waiting for a better price for my bet and a little better odds. So.
Where would you get interested in this market again? Like what level in the S&P futures? How much of a pullback do you want to really start getting interested and put some of that cash to work?
Well, I'm not going to I don't put levels. What I'm going to say is as cheap stocks are created and I see stocks that, are good companies with great balance sheets trading at a discount to asset value, the more of those I see, the more interested I'm going to get. That's not going to happen for a whole bunch of points, guys. I last week took just kind of a look at the market and what would I do if I had new money right now. So I took a database of 11,000 stocks and I whittled it down to those that passed all of my safe and cheap criteria, the safest, cheapest stocks in the world. From 11,000 stocks, I got 12 stocks. So
wow.
Yeah.
Well, what are the top couple stocks there, Tim?
The top couple of stocks on that list are there, and again, these aren't going to be your well-known names, guys, but things like Richardson Electronics, RELL is your symbol there.
Hey, what's your criteria on that, if you mind? I mean, just price to
80,
book?
You're looking here at 85% of book value or less, okay?
Okay.
Then for that particular screen, it had to have a Piotrowski F score, if you're familiar with those, of 6 or more, indicating that it was in a buy range. Had to have a current ratio of 2 or higher and an Altman Z score of 3 or higher. In other words, these are bulletproof stocks.
Okay, just going back, before you give us another stock here, you started the show and you mentioned, that from the Value Line investment letter, Investor Business Daily, is something that you look at for a long-term direction of the market. Could you just real quickly go over that? Because I think it's really important because it's something that shapes your long-term perspective. You mind just touching on that again?
No, because that's a pretty cool indicator. A guy out, as I said, at Cal Poly has done a lot of work with this, and so have a couple investment managers. And I just stumbled across it not too long ago. They put a number on the front cover of each issue that's the average 3 to 5 year appreciation potential for the median stock in the index. A couple of things have been discovered here. Okay, if that reading is over 100%, in other words, the median stock in that issue has the potential to go up by 100% or more over the next 3 to 5 years, the market's just screaming buy. Okay, if it's 55 or less, the market's a sell, and it's at 35.
Whoa. So it's
Now,
just basically overbought. Like this market's just, it's overdone.
well, here's the other thing about this indicator. A money manager did extensive amount of work on it, and the name is escaping me. I'd have to go back and look in my file. Value guy. But he found that that number is highly accurate at predicting market performance over the next 3 years, provided you subtract 50% from it. So if the average potential that's on the cover there is 100%, he's saying that on average historically it's gone up 50%. So today, take today's 35, subtract 50%, you've got a market that's set up with the potential for a negative 15% return over the next 3 years.
And it's
Pulling
not a
back to
yeah,
1700-ish or something.
right, and it's not
Yeah.
it's not like a real volatile indicator, right? So like not
No.
tomorrow you're going to pick it up. It's not going to be at like 44 or something, correct?
No, no, it's a lot like the market cap to GDP. It's, it's a big picture kind of thing. There's nothing in the world to say that stocks can't go up before they go down, but it's telling you, hey, there's not a lot of upside potential in the individual companies in the market. At some point, everybody stops trading futures based on, how Janet Yellen set her briefcase at the last show or whatever, and they start to reflect on the fact that, hey, the companies in this index are trading for a lot more than they're worth.
Okay. All right. Just going back to this Richardson Electronics. Obviously, someone has an opinion here under like the 1050, 1060, 1070 level. Lightly traded issue. Is this something like you're not going to get all nervous if it takes out like that 1050 level, right? You're just basing this on your analysis here. And heck with the charts here, but you're sticking with it, based on your analysis, or was this something that could happen, either price action or company action, that would make you cut this loose?
No, almost nothing would make me cut that loose. They've got over $8 a share in cash. A good but not great business, but that the stock long term should be a lot higher.
Okay, all right.
What other stock you got? What other stock you got for us there, Tim?
Let's see what else is in here that I think is a real fun stock right now. Lakes Entertainment is a fun little stock, not heavily traded. It's a casino company. Plain, pure, and simple. They've got a casino up in Rocky Gap, Maryland. They've got interest in some other casinos around the country.
What's the symbol on that? That's
LAKE.
LAKE, Lake.
Yeah, LACO, sorry. It's
LACO.
Yeah.
Laco. Okay.
Still working on my coffee here this morning, guys.
No problem.
They had an agreement last year that was terminated by an Indian tribe to run one of their casinos. As part of the termination, they paid them a huge cash fee. $57 million comes to mind, and this is only a $135 million company. And then the results from the new casino in Maryland are coming in fantastic. I mean, much better than anybody expected. So you got a stock here trading a little over $5 with $3.43 in cash. Sales up 300% last year. Earnings growth is pretty solid so far this year. Over the last 5 years, they've averaged about 20%. This is just a really safe, cheap little stock, and you're on the same table as the insiders in this one. They own 35% of the company.
Similar technical formation here, Tim, and I've we've been having you on the show here for a couple months, and when you talk about these stocks and we bring up the charts, a lot of times, it has the basing formation. Here you have well-defined support under $5. Needs to get a bump up here to keep going. So, but this is something too that if the market started to roll over, it really wouldn't worry you overall because you're just basing it on the fundamentals of the company.
Yeah, and that's what I try to do with all of my stocks. Right? Seth Klarman made a great point in his last shareholder letter that way too many people, the first thing that they worry about when they jump into the market here is how much money can I make? My first question is always, what can go wrong and how much can I lose? And I don't like to buy a stock that I'm not prepared to buy more of, 20, 30, or even 50% lower. I want just like this huge brick wall margin of safety in the stocks that I buy.
Okay, to end the show here, looking at the action that you had on Friday, and you mentioned your indicator for the Investor Business Daily. Do you have something in the market itself, something in the S&Ps or the S&P Cash or the Dow that would would make you even more cautious on the market?
Yeah, if it keeps going up, I'll get more cautious.
Okay.
I don't use absolute levels, guys. I'm not a technical guy at all. And I'm not one of those guys who dismisses technicals because I've got some friends that use technical analysis that have really nice big houses. I mean, so clearly, if you know what you're doing, it works. But where you look at a chart and see a clearly defined pattern, I look at a chart and I see duckies and horsies. Okay, so I really rely on the fundamental analysis of each individual company and try not to make precise market forecasts, because if I ever make a precise market forecast, you should probably go the other way in the short term because I don't have a real good track record there.
Okay, all right. We've had Tim Melvin on of the Deep Value Investor Level, giving us his take on real value in stocks. Tim, thanks for coming on again. It's a pleasure as always, and we're going to end this segment and take a quick break. Thanks a lot, Tim.
Thanks, guys.